All right, this is another journal entry related to a company receiving services. So your company receives services that you will need to eventually pay for. Well, what does that mean? You didn't pay for it. Nothing was exchanged. No cash was exchanged. So nothing was paid for you at that time. So the cost was put on account with the Avenger. I almost called it the Avenger. No, it's the vendor. All right. So nothing was paid by you at the time. The cost was put on account with the vendor, and you received services. And usually services are going to be related to some sort of expense that you have. All right. So you receive services, and they're related to some sort of expense, and you're going to have to pay something in the future, and that's going to be a liability, right? So that's some sort of liability here. All right. So we have to figure out what the debit and the credit is going to be here. All right, so what's the debit going to be? Well, our debit, we debit expenses here. All right, so we could call it something related to service expense. Service expense. All right, and then we would do a credit here as a liability, and you don't want to just call it liability whatever. You want to come up with the name that makes sense, and that's the account name that usually is given is accounts payable. So accounts payable, and the amount is 7800. We just have to figure out the amount, and it's the matching amount here. And so that's what we would do when we encounter this. All right. Now, to go the extra mile, you don't have to do this for the problem. So if you ever have a problem like this and this is all it asks for, you're done. But in the future, what we have to do is you eventually have to pay off this account, right? So you have this account payable here for $7,800, right? And you have this expense here of $7,800 that is going to flow into your owner's equity right here. But this accounts payable, you're going to have to pay that at some point. If you don't pay it, somebody's going to come after you, right? And so sometime in the future, so I'm going to draw a line right here to signify this, you're actually going to have to pay out cash. You're going to have to credit cash for $7,800. And then this accounts payable is going to be debited, accounts payable. And I kind of ran out of room here, but this cash of $7,800 gets credited. So you're going to have a credit of cash of $7,800. And again, this is just the extra mile. You didn't have to do this. And then the debit would be accounts payable. And that's how you'd show that your accounts payable was paid off. All right. This cash should probably be moved over a bit more so it looks more like a credit. But the accounts payable and cash. So cash gets credited and accounts payable is there. All right. And those of you that are going to write something in the comments, I'll go ahead and fix it now. So it's going to be cash over here. So it's over just a little bit more, 7,800, and then debit. All right, accounts payable. Accounts payable 7,800. All right. When you do those two, that's how you get the account written off, and that's how you record this type of journal entry.